Hey everyone, John Henry here from support@schooloftrade.com, and today we're going to be taking a second look at the GOMI. Now we're going to be looking more specifically on how to use the GOMI in high interest areas. So on our 5-minute chart, what I did was I outlined a couple specific areas that I want to look at. So these examples are actually from today, 7-3, and the first example I want to show you is actually back a couple days on 7-1. So this is going to be an example of using the previous high of day, which is this dashed line, and what price action does when it reaches that area. We'll be looking at the previous low of day here when it comes down into it, what to look for as a reactionary buy setup, as well as back to today. We're also going to be looking at what happens when it hits the current high of day, as well as what happens when it hits the current low of day, and then just basic ways to use it around those locations. So I've outlined them on the 5-minute chart basically so I can go back to my ladder and I can find them a little bit easier. So what we'll do is we'll go back a little bit until we find the first box. And now this one's going to be looking at buying the lows. So you can see right here, if we, let me make these a little bit bigger. You can see here when we came into these lows, it acted a little bit interesting. It didn't immediately bounce right off of it. Let me delete this box real quick. You can see that price came into these lows right here, and then it was met by sell stops. Now, the only reason I say these are sell stops is because right below that, there's no more selling. It literally stopped right here. 189 contracts got triggered in short, and then reactionary buying looked like it was going to start stepping in. However, when you continue to look at this and you keep looking at the drag down, you can see that now this is what the continuation of selling looks like. When you start seeing these extra blocks of sellers coming in, this is signaling a breakdown of that low of day. And right here you can start seeing that the sellers are starting to dry up. They're not coming in as aggressively through here with smaller amounts, whereas up here you're looking at 189 contracts getting filled short, and you start loading into the 20 20 20 20. By the time you start actually filling these, you're looking at several hundred on the way down. But when we start collecting in this the commitment of traders, you can see it's very, very low, 0 1 1 4, and it looks as though they're losing their grip on this. And usually what you'll see towards the bottom of these big moves or before it bounces, you'll see a big push. 266 right here was 537, and that's why if you're looking for these as a reactionary bounce, looking at the commitment of the traders, the buyers just weren't there. And you can see once you get this final little push down, it's met with more looks like selling stops because there's no more continuation, and then the commitment of traders begins to come back in. Now this wasn't the final bounce to this, so in this entire move, basically, you're not looking to get long yet. Now, right here, when the commitment comes back, you might be considering looking at a long for a small scalp, which would have been possible here, but you're only going to get maybe 3-4 ticks out of it. Now, the big problem with this is you've still got sellers' interest. The commitment's not very high, but neither is the buyers. They're not showing much interest either way. And you can see here now the commitment of the buyers begins to start stepping in, followed by zero commitment of the sellers. So the sellers start looking like they're going to start weakening up, and then all of a sudden, boom, they come right back in. And now here again, this is where you're starting to look for more sell stops instead of actual selling volume. So right here we hit these lows, and there's not really much. You get a couple down here, but it's pretty low. And then it looks like they finally found those sell stops right there at 70, and it's met with an opposing block of buying orders down here. Commitment completely dries up. 82 contracts come in on the buy side for the commitment, and then this is where you're going to be looking for a higher probability bounce. When you have larger numbers here against zero, that's going to be the key factor to catching a nice bounce off these lows. And you can see that you probably could have got another 10 ticks out of that. And really, these scalps off the lows are going to be worth about 10 ticks. But you can see price came back up, but it wasn't quite done yet. It wasn't finished. So if you look at this very next time where it tests these lows, this is the nice setup right here. You've got 44 sell stop. All of the bulk of volume comes right down here. And again, just like the other one, you get buying volume matched with zero commitment from the buyers. This is another opportunity, again, where you're able to get in for a nice commitment or continuation from the buyers to be able to pop this right back up again. I like seeing these preferably more than than as the market's breaking down like the prior example, this is going to be what you're more looking for. A quick test of it and then an immediate rejection right back out. So that's going to be the example of how you're going to be using these to buy the lows, as well as what it looks like when the lows are breaking down. So as you're coming in, you want to see those sell stops being triggered, met with opposing buying. You want to see the buying pressure, the commitment completely outweigh. I want the opposing to be zero. I want no interest from the sellers in this low when you make a little token print like that. That's going to be where you're going to be looking to get in long on this. So now the next thing that we're going to be looking at is selling the high of day. So if we zoom back a little bit more, I have the next one outlined up here. And now this first test, I can delete these now. Again, just like on the opposing side, what you want to see is you want to see the commitment of the sellers come right back in on this. So you can see right here, the buyers are pushing this up really hard. You've got 300 commitment from the buyers, absolutely none from the sellers, no interest at all. But this is where it gets kind of interesting, because right at the highs, right above the highs by a tick or two, you get this big block of 114 bought. And then the next candle is met with the high volume node equaling that high with opposing selling. But not just that, the sellers completely come back in, no commitment from the buyers, and this is where, again, just like the other one, you're able to basically pick this off for a quick 10-tick scalp or so, and that's going to be selling the high of day. Now, a couple days back, we also have an example of where you're going to be buying the prior low of day and selling the previous high of day. So let's go back to the first, which is when that example took place. And I think I skipped the one, yep, right here. So what you're looking for is really the exact same setup. You want to see the bulk of volume coming in at those specific levels. So in this case, this is going to be looking at buying the prior low of day. And you can see right when we came into this, this is where things get kind of interesting. The previous levels can be very, very important levels, but you have to take note that these are from the previous day. Anyone that's specifically scalping isn't going to be looking at these levels for long-term plays. And just like buying or selling off of the high or low of day, you're usually not going to see a lot of continuation. That's where a lot of action is happening at those highs. So you might get a bounce of 10 ticks, you might get a bounce of 15 ticks, but that's about it, and then it gets kind of choppy. And you can see once we entered this area, that's exactly what it did. It just kind of, whipsawed back and forth before it finally picked a direction to the highs. But looking at this first example, when we first came in here, we've got the sellers in complete control. 135 down, no commitment from the buyers. 165 down, little bit of commitment from the buyers, not much. And you see this -2, sellers completely dry up at this previous low. We get a huge block of buying volume coming in, 192 contracts bought long after you just triggered 140 to go short. That's a big signal that these were sell stops, and then you've got buying coming back in to pick this back up. Now, the other thing, I personally really like seeing 0 up here if I'm looking for a quick scalp, but because this number down here is so much bigger, 169 to 2, this might as well be 0. There's not going to be much of a difference. So. And then if if you wanted to wait for a little bit more commitment before you saw that, right down here when we pierced this low one more time, you can see we actually skipped it. If you look right here, there were no orders filled, buy or sell, at this previous low, and we tested that previous low a day. And that's a big indication that this moved really quick. It popped right through it, didn't even have a chance to fill anybody, skipped right over it. And then you'll see again down here, you've got sell stop, sell stop, sell stop, 150, 124, 123, big numbers down here, and they're met with opposing buying. And if you look at the lows, what happened here? You've got commitment of buyers completely in charge, absolutely no selling commitment. And right here is a perfect example of where you'd want to hop in for a quick 10-tick scalp to the top side. Now, again, that 10-tick scalp would have worked right here as well, just because, like I said, this number is so much larger than this -2 that, this might as well just be 0. So now we're going to look at the next example back, which is going to be looking at selling the previous high of day. And now this is going to couple with a couple things here. So not only are you selling the previous high of day, you're also selling the current high of day while you're breaking into it. So we're going to be looking at kind of the same example as before, where you've got the commitment of buyers getting this huge push into these highs. 432 commitment from the buyers, 0 sellers. And again, right here, you'll notice no sells were filled. Completely skipped that area. That's aggression. That's a lot of aggression. When you start seeing levels getting skipped like this, be warned, you don't want to be in front of that train. That's something that's going to quickly bite you. But looking a little bit higher, you still got the commitment coming in pretty high, 432. You've got another multiple of 100. I think my line's blocking right now, so I can't really see it. But then what happens right up at the top? You got this big sell block order of 182 contracts. And normally you look at that and say, okay, well, normally you would see this buying stops right here at 389, but it's met with half, if not more, of selling pressure as well. So not only are buy stops being hit, people have already picked up on those sell stops and are starting to accumulate their positions. And what happens right here, you've got this high volume node, and you can tell it's a high volume because it's outlined in this blue color right here. And then right next to it, this high node is tested again. Another huge block of sell orders come in, 150. And then all of these buy stops right here, no continuation to the buy side. They're drying up. That's basically all it is. You got 126 commitment of sellers and none from the buyers. All of these buy orders came in, and you still triggered a zero. That's a big reversal sign. Now again, this is where you're looking for 10, 15 ticks. You're not going to get much more than that. And that's exactly what happened. You popped right in here, came down, filled that 10 or so ticks, and then just kind of rattled around in here and chopped around. So that's the primary way that I look to use the GOMI price ladder. Now you can use this in a lot of different ways. It's an extremely versatile tool. Right now, if you look, I'm using this on an 8-range chart. And the nice thing when you have this set up, if you go into the indicators and then you look at the GOMI price ladder, what you can do is at the very bottom, if you couple it with the GOMI recorder right there, let me change this to red so you can see this right here, this GOMI recorder indicator. When you couple the GOMI volume ladder with the GOMI recorder, you can actually record this data. So now what you can do is you can go back and see it just like I have right here. And all you have to do is scroll all the way down in the GOMI volume ladder, and you want to just change this write data, and you want this to true. And you want to do the exact same thing with the GOMI recorder. So you'll select that, and then in this case I have it set to binary, and then write data true. And that way you'll be able to look at this while it's loaded, leave it up on a separate workspace, and just basically use it as kind of a tape recorder. You're going to be recording the price action as it happens. That way you'll be able to go back through, you can look at previous examples of what happened when it hit this level, and just basically kind of back test it. So that's going to be how I personally use the GOMI ladder. If you have any questions going forward, please feel free to send an email to support@schooloftrade.com, and we'll be sure to get back to you as soon as we can. Have a good one.